This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Thanks for being with us here on Business Now. Look, it was a busy weekend in housing markets with clearance rates really taking off. Though there are not many interest rate rises to come. Now, across the nation, 13 auctions, a clearance rate here, 63.1%, really quite solid. In Sydney, 473 auctions and a clearance rate, 65.3%. In Melbourne, 472 auctions, a clearance rate even healthier, 69.3%. In Brisbane, 48 auctions, a clearance rate there, 50%. Have a look at Adelaide, though. 47 auctions, the clearance rate is boom-like, 80.9%. What's going on there? Anyway, finally, Canberra, 53 auctions, a clearance rate of 58.5%. Let's bring in here Paul Ryan, Senior Economist at REA Group's PropTrack. Paul, always good to be with you. What is it? The Reserve Bank has one pause in interest rates and the market went nuts.
Yeah, you could describe it to that. We've seen property markets really start this year strongly. Demand has been incredibly strong. Kind of all our indicators have started to tick up and there's quite a big change to how the property market ended 2022. OK, you work for the Reserve Bank as an economist. When you raise interest rates in this way, you're supposed to quell demand. Right? You don't suddenly pause interest rates and have the market take off again. Otherwise, you're defeating the purpose of the object of those interest rate rises. Yeah, well, we saw as soon as the RBA started raising rates, we saw prices start to fall. And now as soon as the RBA pauses raising rates, we've had prices start to increase again. I don't think that is really how it works. The RBA knows that it takes, as Phil Lowe said recently, there's long and variable lags in how monetary policy operates on the economy. So we kind of know the economy is going to continue to slow down. And we still think that these really high, much higher interest rates are going to continue to put downward pressure on the property market and property prices in general. But I think it's just that weight of demand. That's what's really surprised us in 2023 is there's a huge amount of demand for property. And you can see that most intensely in the rental market at the moment. Well, you can. Rents are, on average going up by some 25% around the country right now. There's a second thing. I mean, Philip Lowe has said, if all of a sudden there is an outbreak of inflation or if demand is not really curbed or anything like that, he's prepared to press the button and go again. I think people have not listened maybe to that part of the conversation either. I think there definitely could be more rate hikes to come. The RBA will be keenly watching CPI, inflation data coming out next week. I think people are just taking solace from the fact that, the end is near. And that's something they couldn't say earlier in the year. And that's breeding into strong confidence. But even you go back last week to the employment data. The employment data was close to 50-year highs or lows for the unemployment rate. And again, this is fundamentally a good story for Australia, for families, for households. Yes, they're coping with higher costs, but they're actually able to cope with those higher costs while they've got jobs. Yeah, the economy, if you look at the data, is still booming. Now, we know, again, those long and variable lags, we know the economy is going to slow down. We've had the fastest interest rate increases on record. The RBA put out other data showing that actually we know that some mortgage holders are going to struggle this year. Something like 15% of mortgage holders are expected to potentially be underwater in terms of their income and versus their expenses. So the RBA knows that later this year that pain is going to kind of flow through the economy, and they're taking a wait-and-see approach on just how quickly inflation slows and how quickly economic growth slows. So the more realistic view of this might be from the big property companies themselves. We've been talking to them in the last little while. They're saying that the level of inquiry, as compared with where it was 12 months ago, is down by more than 50%. So that's where you kind of get a sense of the conservative nature, the more careful nature of people buying property. I think that's right. But having said that, demand's really strong. I mean, the number of people that we're seeing looking at properties and actively engaging with listings on realestate.com.au is really high. It's not as high as we saw in those boom periods throughout kind of 2021, 2022, but it's much higher than pre-pandemic levels. So there's a huge amount of pent-up demand for housing across Australia, and that's continuing. That's the reason we're, I think, still seeing prices increasing. And just a very quick one, is that equation of rents versus paying a mortgage, is that starting to become a more real thing now? I think that's part of the reason we're seeing rents increase so rapidly. I think a lot of households that would have potentially bought their first home, but due to interest rate increases now are kind of stuck in the rental market for at least a bit longer. That's continuing that high pressure on rental demand and rent prices. I'll tell you, Paul Ryan from PropTrack, always good to have in the program. Many thanks for your time today. Thanks very much.